Hello everyone. In this session, we will take a look at a series of multiple choice questions. You would learn about what is the questions asking you about. So you would learn about how to approach this question from a knowledge. What is the question asking about? What's the topic? What's the area of competency that they want you to know? That's one, that's important. Two is how to answer the question, strategy on how to answer the question. I always tell the students to put yourself in the shoes of the exam writer. It's so easy to write the correct answer choice because that's the correct answer choice. What's more difficult for the exam writer is to select actually the wrong answers. And under those circumstances, if they select obvious wrong answers and you understand the topic, it's easy to spot those wrong answers. So it's harder for the exam writer to choose the wrong answer because they have to make the wrong answer difficult. And that's difficult by itself because the right answer is correct. They know the correct answer, they can put it. So if you understand the topic, it's easy for you then to spot what's obviously wrong. So that's what you need to know. Also, as I'm going over these questions, I will make sure I will point out what to look for in the question. For example, if there's except for, all the following are correct except, you have to be careful. Except for is you're looking for one answer, maybe 3 incorrect, 1 correct, or 3 correct and 1 incorrect. So you have to be careful what you are being asked. Always, if there is a questions with a lot of numbers, read what you are being asked first, because if the question involves a lot of financial data, they could ask you many questions. First, look at what am I being asked. So as you navigate through the data, you would start to kind of pull that relevant data that you need to answer the question. So I will show you these techniques step by step, whether you are a CPA exam candidate, CMA student, or an accounting student, or a finance student. You need to learn how to tackle multiple choice question. It's not only the topic, it's the technique, the strategy that I will show you. Let's go ahead and start to tackle these questions.
Okay, let's take a look at this question. And this question reads, which of the following is an advantage, specifically main advantage of using a multiple step income statement instead of a single step? What is a multiple step income statement? A multiple step income statement, we break down the income statement into various sections. But what is the main advantage of a multiple step income statement versus a single step? Single step, it includes all the revenues and the gains together, then all the expenses and the costs together, and it takes the difference. Well, let's start with the first one. Start to eliminate the easy one. The multiple step reduces income tax expense. It doesn't reduce anything. Income tax expense is the same whether you have a multiple step or a single step. These are format issues. Therefore, this is an easy elimination. It presents the company's financial ratios. Ratios are X over Y. You're taking two figures and you divide them by each other. The income statement does not do that, whether it's single or multiple. Expenses are classified based on function. Yes, in a multiple step income statement, it shows you your selling expenses separately from general and administrative expenses. So it breaks down, it classified your expenses based on function, giving the users more detailed information. So between A, B, and C, I'm going to keep C. Revenues are classified based on the dollar amount. No, revenues, no, it just doesn't. You don't classify revenue based on the dollar amount. Just classifying means grouping revenues. That's incorrect. Therefore, as I suggested, the answer is C. Check your answer. And let's take a look at this question. What is income smoothing? Basically, smoothing the income. What does that mean? Well, is it management ability to show predicted earnings amount less than the actual earnings every period? Is that income smoothing? Show predicted earning less the actual. It's the difference between the predicted and the actual. No, that's not really income smoothing. Let's look at another option. Management ability to reduce volatility in reported earnings over time. I'll have to say, between A and B, I'm going to take B. I'm going to tell you what I mean by why I will take B over A. Smoothing, like, let's take a look at a line. This is a smooth line. This is not smooth, right? So when earning is up and down, when it's volatile, you don't like this. Once there's a volatility or uncertainty, investors don't like this. So what companies try to do is smooth income, make income look either going up or stay straight, but they don't like to show income going up and down because that's volatility. Volatility is uncertainty. So management ability to reduce volatility, yes, that's part of income smoothing. Management ability to keep the same current customer sales for many years. Now you want to keep the same customer sales or increase it, but has nothing to do with income smoothing. So A and C are out. Management ability to show predicted earning amount more than the actual earnings. No, that's not good. I mean, it's good if you can show more than you predicted, actual more than predicted, but that's not income smoothing. Income smoothing, trying to keep your income smooth over time, maybe going a little bit higher over time rather than let it fluctuate. Therefore, the answer is B.
If you like what you just saw, how to solve these multiple choice questions, whether you are an accounting, a finance student, a CPA exam candidate, a CMA exam candidate, I strongly suggest you visit my website for additional MCQs, video MCQs. That's going to help you whether you are a student or studying for a professional certification. The best investment you can make is invest in yourself. Check out farhatlectures.com. Start your free trial so you have access to additional resources and succeed. Good luck, and I hope to see you on the website.